So hi guys, hi everyone, happy weekend to you all, and nice trading going on your end. On my end, it's going relatively slow, but yeah, we're just doing what we can. We're learning new things every day. We get to grasp the market in its entirety daily. Get it to really understand how this market works and everything that makes sense in the market to us is actually making us see how attaining financial freedom in no time is actually possible if we stick to the rules of the game. So, guys, one thing I want to put out there is that on this case, we are talking about technical analysis. I'll be talking about technical analysis and then in reference to trend line trading. Okay, because I've seen a couple of things this week. I saw a couple of things this week that I want to use to give you guys an example of what I have talked about in one of my past videos. So, in terms of technical analysis, you first of all need to understand that the market does not care about any line that you place on the chart. The price chart does not care about your support lines, your resistance lines, your trend lines. It literally cares about nothing of this such. Okay. What the market cares about is how the orders are flowing in the market and how people are bidding and asking that particular currency or whatever financial instrument it is. So for this case of trend line, let's get right into it. I believe you understand what I just said, that the market does not care about your technical analysis. Nevertheless, it moves based on human psychology and how people are bidding in and asking for a particular currency. Now, this is GBP JPY charts. What I noticed on GBP JPY charts, I also noticed on GBP AUD chart. I will take you to GBP AUD chart and we'll look at it together. But first of all, let's look at GBP JPY chart. Now, on this chart, we already know what trend line is. A trend line is a line that connects that is used to connect the lower highs or the higher lows of a trend. So in the case of a downtrend, it's used to connect the lower highs of the downtrend, and in case of an uptrend, it's used to connect the higher lows of an uptrend. That is to track the trend of the market. The first principle of a trend line for me is that just 2 points are needed, which is the first visible lower highs, two visible lower high points that you can see. So this is a lower high point, this is a lower high point, and this is also a lower high point, which identifies to be a point of contact point confirmation. That is, I call it COC point and contact point confirmation, CPC rather. Now, this trend line here is only acting as far as price is below it. The moment price goes above the trend line seem not to be acting, but the trend is still acting up. Market structure, we always mention market structure, and what you should focus your attention on, even though you are using trend lines, support resistance, and all of that, is market structure. So market structure will always be market structure. Nevertheless, trend line trading also makes sense. For the case being like maybe you are able to connect point A and point B. By the time price came into this area, you see one, two, um, contact point confirmation, and then you see price action confirmations around there. You'd have been able to take shots. Now, this case, price tested the trend line several times, but actually failed to hold and then it broke above the trend line. But note that price breaking above this trend line, it didn't break above the structure point. This is the structure point, which we can call a lower high point. Now, for this lower high point, as far as price has not broken above the lower high point, the market is still bearish for this case. If it was bullish, you would have known. It's still bearish for this case. Nevertheless, it's creating some kind of temporary higher low and all of that, but the market is still very much bearish in this case as far as it has not broken above the most recent higher low point. So the lower high point rather for this case. So you need to understand that as much as you understand candlesticks. So as far as the price is still very much below the lower high point, it has not broken structure. You might think it has broken structure on higher time frames or lower time frames rather, but that should be a lower time frame. Like it's also very important for us to understand time frame correlation and all of that. It is very, very important. let's say for instance, if you go on the lower time frame, like a 15 minutes time frame, you see the market printing in higher highs and higher lows in this case. But don't forget that the bigger time frame, which I always focus on, like the daily and then the 4 hours, and then 2 hours and 1 hour, is still very much bearish as far as this lower high point 24 hours is not broken. Now you could ask me, Flourish, this area here, the price went all the way up and created a lower high point. This lower high point is still forming within the range of this point and this point, and it is not a confirmed lower high point until price forms a lower low. Because if you call this a lower high point, then it will be wrong in terms of reading market structure. It's only a swing point. I will only call this a swing point, but not necessarily a lower high point. It's only going to be a confirmed lower high, assuming price went below this low right here and formed a lower low. Then this becomes a lower high. And for this case, price is printing a bearish engulfing pattern right around here. It tells a lot that bears are in this market. So if the market should pull all the way down, come back below the trend line, which is always very much possible. The reason is because lower high point is still holding up here, so price can still come below the trend line and continue to form a lower low. If it does that, then this becomes a lower high and this becomes our new lower high point. Now it can be seen as a swing point or as an area of interest because it's forming some significant price pattern on a resistance, key level of resistance rather. Why is it the key level of resistance? Because we see previous areas of support on resistance and it's sitting at 182.500 and price breaking below now. We expect the price to drop all the way down to 180 area, which is this area down here. So guys, that's that for GBP JPY. Price is currently testing resistance and there's tendency for the price to keep falling next week into the areas of 180 flat. So let's see GBP AUD for what happened there. We saw price. Sorry, that's GBP AUD. So for GBP AUD, guys, it's pretty simple. We'll still go back to GBP USD and I'll show you how trend line is tested and price reacts to it. Now, for this case, we have a trend line here. I posted this on Telegram. If you have not joined Telegram, please do well to subscribe. This is a lower high point again, so I connected this one to this one and then extending downward I see this as another lower high point. And if you decide to form a channel with it, good as well. This is a channel. I can decide to remove it. It doesn't really matter for the time being. Now price came into this area for the third time, for the fourth time. I saw price testing it, but I was skeptical that price was going to hold at the time because on the lower time frame, I see the price creating higher lows and this candle was very, very strong. So I wanted to see price give me a very significant candlestick pattern like this one here or like this one here in this area, like you see here, and like you see here, and like you see here. So the price should have given us a very nice bearish confirmation candle on the 4 hours, but it didn't. Instead, it was giving us inverted hammer here one, inverted hammer here two, and then the price broke out. Now, seeing this in the past, when I started trading, I would think that this is a very nice breakout and that the market can easily just continue to the upside, probably reaching into 1.92 flat. Nevertheless, I usually look for my mid range. For this case, the mid range for this price will be right around here. And if you want to know how I draw the mid range, draw your key levels on the chart, key psychological levels, and then draw Fibonacci on it from this point to the next key level. Find the 50%, that's your mid range. So for this case, the price perfectly tested the mid range, but remember, we have a lower high point here that has not been broken. So the lower high is still holding, so price is still bearish regardless. Until the price starts to trade above this lower high point, we are still very much bearish. And so the market created pin bar candle from that mid-range. It didn't respect this resistance very well, but still we would say that price failed to continue up. Now you can see how price came back below the trend line. This was the example I wanted us to see. I wanted everybody to know that price breaking out of a trend line does not mean that the trend has changed. So what changes a trend is a change in structure. That is, if the price has gone above the lower high points, then we can say we can start solidly looking for buys, maybe temporarily into these highs or into these highs. Now let's look at GBP USD lastly before we call it a wrap. Now for GBP USD, guys, we just had a touch. I missed this trade. It was painful because I was not there at the time. Now we had one, two, three touches. Okay. Now if I should drop down to a lower time frame, you would have seen I would have showed you my entries on there. I have an entry already. If I continue to extend this, right, market has moved about 50 pips already in this US section. Now you can see how we have a key level right there of 1.22500 right around here. And also let me make you see that clearly. Let me use my annotations for that. Yeah, we have a key level right here of 1.22500. I want this to be 1.22500 right around here, and then you can see how the price came into the trend line testing both 1.22500, and this case is actually rejected. It's different from the first two examples that we have seen. So what makes sense now is in this case, let's drop down. So what makes sense now is in this case, we found a hanging man. This candlestick is called hanging man, and it shows signs of bearish momentum in the market. If you wanted to take an entry in this case, you have to drop down to maybe a 30 minutes time frame. Look for these significant candles around that key level, and this is a very high probability area for the market. Everyone should know that this is a very high probability area for the market. Why? Because we have the trend line and as well the resistance line. I missed the trade because I was not on my chart at the time. I didn't set an alert. If I did, I would have been able to get in on the trade. Another important key that you should know is that how the price was ascending to the upside is also something that you should have taken note of. The volume was actually dying down here, and then the volume came in again here. Now, looking at this guy right now, this is the 30 minutes time frame. We had when the price touched the trend line, immediately we found a bearish candle and a lower high point. If you go on the 15 minutes or the 5 minutes, as the case may be, this lower high point becomes very clear. This is a very nice bearish candle, a Marabuzu candle. That would have been an entry for each and every one of us that wanted to take the trade. Price stop loss above the candle, and then your take profits at key levels down here. So guys, those are just few examples on how to trade trend line correctly. So folks, till next time, may the peace be with you, and I wish you all good trading.